So, hey everyone, thanks for coming by. If you're watching this Facebook Live or a replay today, we have a special guest on here, and that is Jeff Chillson. He is over at Guaranteed Rate, and it was nice enough of him to take some time out of his day to really go over the do's and don'ts of mortgages as a first-time home buyer. And then we're also going to talk about forbearance, which I know a lot of people are talking about, they're jumping on, and I really think, in my personal opinion, that a lot of people don't know some of the pitfalls that come with forbearances. So Jeff, man, can you hear me? Everything's good on your end?
Yeah, everything's good over here, Aaron. It's Jeff Chillson, by the way, not Carlson. But
did I say Carlson? I'm sorry.
I think so, yeah. No worries. But yeah, it's great to be on with you here. And obviously, we've got some important topics to touch on today. First-time home buyers is obviously a great topic. Obviously, now is kind of an interesting time for buyers out there, but I think it's a great time for first-time home buyers looking for a home for a lot of different reasons. But also forbearance, that's such a huge topic, as you mentioned right now. So definitely looking forward to going over some information regarding the do's and don'ts about doing a forbearance with your lender.
Yeah, that's great. So I know that with a lot of the first-time home buyers, one thing that I've seen in the past is, they're excited. They're getting into that entry-level home, which there aren't a lot of currently in the market, but they start looking before they even get a pre-approval or any type of letter from a lender like yourself or a credit union or wherever their financial institution is. What are some of the steps as far as getting that pre-approval, some of the documents that people really need to make sure they have available to make it go kind of smooth?
Yeah, that's obviously one of the most important things that first-time home buyers are going to want to do right away. Obviously, if you contact a realtor and have some interest in properties, that's a great first step. But as soon as you do that, you definitely want to get in touch with the lender so that you can figure out how much you're able to get pre-approved for and what kind of loan options you have, because there's a ton of great loan options out there for first-time home buyers to take advantage of. So, that would be the most important thing, is filling out a loan application. Nowadays, it's super easy. At Guaranteed Rate, we have a digital mortgage where you can apply within 10, 15 minutes. You upload your information into the system. Your credit gets pulled. You put your income in, self-stated income, and your assets, and then you fill out some other miscellaneous items that we need for an application. If everything looks good, we can take a look at the options for you, or we'll reach out and say, hey, we need a couple of pieces of information in order to finish it up. But once you do that, honestly, handing over your income documents like your tax returns and W-2s, whichever apply, and or pay stubs, and then obviously bank statements to confirm assets. Those are the most important things that you want to do right away. And your lender can very easily, once we have that information, figure out what kind of options you have and exactly how much you're pre-approved for, so that you're looking at homes within your pre-approved price range instead of, going, starting from the opposite direction and looking at homes when you don't even know how much you're pre-approved for. True.
I've seen that plenty of times.
Yeah, it happens a lot.
So you touched a little bit on assets and stuff like that. Now, I know everybody, that I've talked to before, they're like, oh, my credit's not so great, or maybe it's really good, but, I have a high debt, maybe they went out and bought 2 new cars and a truck and a boat. So how important is it really when it comes to credit? Is credit more important than the debt to ratio? Have you seen it where people have had really good credit but too high of debt?
Yeah, absolutely. Credit is super important. The debt ratios, there's a little bit of flexibility depending on the program, but typically you don't want to be over 50%. But obviously credit's a huge factor. Credit is going to determine what kind of interest rate you have. Could be a difference of, a point if you have, somewhere in the 600s or somewhere in the high 700s. So it could make a big difference.
Okay. Can you just elaborate on what a point is? I mean, I know what it is, but I don't know if there's other people that are watching are like, what the heck's a point,
Yeah, mortgage lingo right there.
Yeah.
So a point is just like, say, I'm talking about a rate of 4.25. So 4.25. A point would be, 1 percentage point less. So it'd be 3.25.
Okay.
That's like one full point is the equivalent of one,
Okay.
as opposed to, does that make sense? Yeah.
Yeah. I think that'll help out some people, because we do kind of catch ourselves using a lot of the lingo, and I try to keep it as simple as possible.
Definitely.
But now, are there certain things that when somebody's looking to buy? Now, I know there's a bunch of different programs out there, from regular conventional, FHA, USDA, VA loans. Now, when somebody's coming in and they're looking to buy, how much money should they plan on setting aside? Let's just say for your average first-time home buyer, maybe going like FHA or VA.
Yeah, so those two programs obviously are a little bit different. They're great programs. VA is an excellent program for veterans. If you're a veteran like yourself, you obviously want to take advantage of a VA loan more so than any other product. It's going to give you a zero down option. It's going to give you a very, very low interest rate. And if you're exempt from any mortgage insurance, those are super, super great benefits that VA have that can save tens of thousands of dollars over the life of the loan.
Oh, that's pretty good.
Yeah, and VA, obviously, I was talking about the 100% financing. So you don't have a down payment for VA, but you do have to consider closing costs, which typically on a $150,000 house, maybe $200,000 house, you're talking, anywhere between $6,000 and $9,000, depending. Okay. So just being prepared for that. If you're doing a VA loan, have $10,000 in the bank, you want to buy a $200,000 house, 100% down payment, you're in good shape. FHA is a little bit different. It's 3.5% down, so at $150,000, you're talking $5,250. And then for $200,000, $7,000, and that's just the down payment. The closing costs are additional, and you're talking another, like I said, about $6,000 to $9,000 on top of that. But there's ways when you can minimize that. You can get seller contributions. Depending on the program, you can get 6% for FHA. The government programs usually allow a little bit more seller concessions than conventional loans. So that's a good way to minimize costs.
Okay. Now, I know there's a loan out there for people that are looking to do fixer-uppers, and we know everybody that we've probably talked to is obsessed with HGTV or DIY, and wants to buy a home to rehab and live in it, and then sell it maybe 3 years down the road. Now, there is a 203K loan that I know of. How complicated is that compared to a regular FHA?
They're similar in a sense where the down payment is the same, but there's a lot more paperwork involved. Obviously, you're going to need to have a specialist to do the loan, which we actually have specific 203K specialist team at Guaranteed Rate. So I don't do the 203K loans, but if you did want to get a 203K loan, you can contact me, and then I basically get you in touch with my team over here, and they're experts. That's all they do is 203K loans. But the paperwork, obviously, there's more documentation that's required. You do have to get quotes from contractors, and then basically what happens is you get approved for the price of the sales price of the home, and then you figure out how much you're going to need for construction, or repairs, and then we add that onto the top of the loan balance to pre-approve you for the amount that you need.
All right, that's pretty cool. So if anybody's watching this, if you're watching this on Facebook Live currently, in the description or the show notes, whatever you want to call it, Jeff's information is all there, from his phone number to his email. I think I even pulled an old school fax number off of your site. So I don't know. I think so. I'm not positive.
Don't use the fax number. Just give me a call or email me.
All right. So if anybody wants more information on, first time buying, maybe doing a refinance, anything like that, definitely reach out to Jeff. All of his information is there. So the one last thing that I kind of wanted to talk on now, I tell my clients this all the time, is you've been pre-approved for a loan. We've been out house shopping. We found a house. We put in an offer. It's been accepted. I always tell them the worst thing they can do is go out and start buying furniture or appliances or anything like that on credit. Is that good advice?
It is great advice. Please, please do not make any large purchases or spend a lot on your credit cards that you currently have. That could screw up your debt to income ratios, and it could really mess things up for you. So all the hard work that you put in and your agents put in and your lenders put in, that could all just get thrown to the wayside because of that. So you really want to wait until you close and then start figuring out how you're going to, pay for some of these big expenses that you want, furniture or anything else, regarding the property and getting it, basically built up so it's your home,
Okay. Oh, that's good. I'm glad I'm giving some good advice, because some people look
You
at me like I
definitely
have
are.
3 heads, and I'm just
That's a
like,
big no-no.
don't do it. But now, because of the pandemic, like, we actually plan on doing this video at your office, and now we're doing it on Zoom. And I think most of us are doing business this way. Because of the pandemic that's going on, there's been a lot of talk about forbearances and how a lot of people are actually jumping on these things. And I don't think a lot of people really know the ins and outs and actually the consequences of doing a forbearance. Can you just touch on that a little bit, to finish up the call here today, just on that? So if somebody's watching this, maybe they've lost their job, maybe they're in the restaurant business, they've been furloughed, why they shouldn't do a forbearance?
Yeah, so forbearance, obviously it is part of the CARES Act, to help stimulate the economy and help homeowners that are struggling right now. And I think it's a great thing. And, but, there is, for the people that are really struggling, that have lost jobs, decreased income, are affected directly or indirectly by the coronavirus, and are having hardships out there, forbearance could be a great option for you. However, a lot of people might think forbearance is basically just being able to skip mortgage payments. That is not the case. Your current servicer is not waiving those mortgage payments for you. You are going to ultimately have to make those payments up. Now, the most important thing you can do if you're thinking about forbearance is to contact your current mortgage servicer. So when you get your mortgage statement monthly, your servicer's information is going to be on there. All servicers are going to handle this differently. So you're going to want to contact them and ask a lot of questions. Figure out what the repayment options are. Typically, the forbearance can be, the first forbearance that you do is for 6 months. 180 days, and then if you need an extension, they typically would do another 180 days. So you can do up to about a year. But what happens after your forbearance period is up, you are either going to have to make a lump sum payment of all those combined payments,
Wow. That's
which
a lot of
is
cash.
a lot of money, and that could really, make a big difference, for somebody, to try to pay that mortgage payment. Like it could be a big issue for a lot of people. But some companies will allow like a repayment plan where they structure it so you're paying a little bit more than a regular payment. And then the other thing is you can potentially do a loan modification where you're extending your loan term, so you can kind of potentially push those payments back, which could be a good situation. So
Okay.
those are the type of situations that servicers will allow, but forbearance is not recommended unless you are 100% struggling and have a hardship. If you can make your payment, if you lost your job and you have savings, I would probably still recommend still trying to make your mortgage payments instead of doing forbearance.
All right. So it's really an extreme emergency type, situation where everything else has pretty much been spent or failed, and the last thing to keep your home would be to do with the forbearance and then work out those payments in the back end.
Exactly. It's a last resort for sure, Aaron.
All right, cool, man. I think we kind of touched on some really good topics today. I don't want to take too much of your time. I know you're like myself, have little ones, and we're all doing homeschooling and stuff like that. And I can't believe it doesn't sound like anybody's falling through my roof right now upstairs running around.
Yeah, you got a full house over there.
Yeah,
I'm surprised I didn't hear anything in the background.
It's actually really quiet, which is making me a little nervous right now. But, I do appreciate you taking the time, man. And I know you're working with some clients of mine currently, and they've had nothing but good things to say so far. So, I think anybody that's watching this, if you do need somebody to do a loan for you, a refi maybe, you're looking for a VA loan, FHA. I know we're currently in the process of a USDA loan for one of my clients right now. So, I mean, Jeff can definitely handle it. Like I said, all of his contact information's there. And I really appreciate you taking the time out of your day, man. I really do.
Aaron, thank you. It's been great. I appreciate this video and setting this up.
Yeah, absolutely. I appreciate it. And maybe we'll have to do one like monthly mortgage updates or something like that. And
Love it.
get together and, go over rates and all that real exciting stuff that nobody really cares about.
Sounds good. I mean, there's plenty of topics we can go over, so
Absolutely.
we can come up with some more.
Sounds good, man. Thank you very much. And thanks everybody for watching live on Facebook, and we'll see you on the next video.